Thank you for joining me. I'm Alex, and I want to talk about Square today because, first of all, we did pretty much all credit cards last week. And since it's related and since it's one of those hot new stocks, I really wanted to do that for a while. What they do is payment processing, but they have like the register side of things, not the credit card side of things. So current price is $69.38, which gives them a market cap of just under $30 billion. The dividend is zero, and I don't expect that to change anytime soon. They haven't really been profitable, or they haven't been profitable over the past few years. And I think that they could get there next year, and it is assumed that they will, but the year-end 2019 numbers are not out yet, and they look like they haven't made a profit last year. So these are all 2018 numbers, but trailing 12 months, I'll get into that. So revenue, $3.3 billion, which is up 50%. In the trailing 12 months, it's up another 30% to 4.3-ish. Earnings, negative $38 million. Trailing 12 months has been slightly worse, so $43 million-ish. Obviously, such a slight increase in loss with a 30% increase in revenue is not terrible, and that means they are closer to getting to profitability, because obviously the bigger the revenue, the easier it is to get profitable. So PE currently negative 700. When it's negative, a higher number is obviously better. So they're losing about 10 cents a share right now. 10 cents a share is not that much, obviously. So negative $38 million on a market cap of almost $30 billion is not terrible. And forward PE is 72, which means that they will be slightly profitable. And honestly, a PE of 72 for a new growth stock is not terrible. I'm not sure how justified the PE is. Obviously, right now, the PE of negative 700 is also not justified, but hard to get into that. So total assets, $3.3 billion, total liabilities, $2.2 billion, and that gives them total stockholders' equity of $1.1 billion. Which is obviously not a terrible thing if they're only losing $40 million a year. So overall, I don't know whether or not I'd be interested in buying them right now. I think that due to them being fairly new and a fresh player on the market, they haven't really been taken seriously, and they don't really have a lot of competition. All of the old school systems aren't that great for like new stores and things like that. The simplification of things is obviously a good thing for the new players. So if they get taken seriously by the old school manufacturers of payment systems, I think that would be a huge risk factor, but so far it doesn't seem like they're being disrupted themselves, or I don't think disrupted is really the right word here, but there are the older, bigger players on the market still, and they could be coming out with a competing product, but they haven't yet, and I haven't really seen plans of that happening either. So for that reason, I don't think there's any major risk factors at this point. It's more years out. Going from a negative to a positive PE is always a good thing. Obviously, having that profit is a great thing for a company. So PE of 72 is not terrible. And I obviously can see them growing quite significantly in the future as well. So if you're looking for a growth stock, I think that this is a reasonably safe choice at this point. And I can see them making a reasonable profit in the future. I wouldn't expect them to have like 50% plus growth year over year from this point forward, because it's such a niche market. But I think that a growth of 30%-ish is fairly sustainable. So I could see them, first of all, getting profitable this year and increasing that profit quite significantly next year. So for that reason, if you're looking for a growth stock that is on the verge of being profitable, I think this is a pretty good candidate. Obviously, dividend investors are out and value investors are out as well. It's not a profitable company. It's not 100% that they will be a profitable company next year. But for a growth investor, I think it's reasonably certain that they will be a profitable company, and it's almost certain that they will be a profitable company before they run out of money. So for that reason, as a growth stock, I can see opening a fairly small position, but everyone else probably finds better opportunities elsewhere. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.